Bitcoin has largely paused in its bearish descent over the last 12 hours, showing low volatility, lack of momentum, and the indecisiveness of a teenage me trying to choose between Final Fantasy VI and Chrono Trigger. Are we witnessing Bitcoin's 2019 Swansong, and must we descend further and further into the belly of the beast before we find the chutzpah, if you will, to rise again? Or is it possible that we can find the silver liniest of silver linings and that Valhalla is just beyond the other hill? In the midst of this turbulence, Venezuela makes another case for Bitcoin. We discuss the merits of central bank issued stablecoins, and is Ethereum the best model for money the world has ever seen? Find out in today's exciting episode of Breaking Bitcoin. Let's get cracking. Little overexposed here today, aren't we? But welcome to Breaking Bitcoin, recorded live here in the studio Friday, September 27th, 2019. Your daily source for market updates, sentiments, and overexposed Justin. So let me just fix that real quick if you guys don't mind. Thank you so much. Always something. How's that? Is that okay? That's a lot better. I don't know if you guys know this, but live streaming is hard sometimes. All right, my name's Justin Wise, the overexposed and perpetually sometimes has trouble setting up OBS, lead analyst and senior mentor at crackingcryptocurrency.com. Hopefully you guys are doing absolutely fantastic wherever you happen to be tuning in from, and whether you are watching us from across YouTube, Twitch, DLive, Facebook, or of course on Roku with the Investor News Channel app. If you want to support the show, and I'm talking to you, make sure to subscribe, hit the bell notification, because YouTube just doesn't like cryptocurrency sometimes. Make sure to follow us if you're over there on Twitch or DLive, and share us around to your friends, your family, even people you don't even like. Doesn't matter. They need to see this information. Hit the thumbs up button. Highly appreciated. And of course, today's episode is brought to you by the Premium Trading Group. I want to give a huge shout out to all the new members of the group. It's so fascinating to have you guys in there. Make sure you guys watch the new member onboarding and don't get overwhelmed at all the content that we do provide. We provided in an easy 1 to 7 type walkthrough. And if you have any questions, make sure to hit up the administrators, the analysts, and all the moderators that are there to help you out. If you guys are new, experienced, or aspiring traders, make sure to head over to premium.crackingcryptocurrency.com and join the fastest growing trading group in the world. Possibly, yeah. But we're growing good, and it's good, and it's good. It's just good to see so many new people come in and start to change their lives by adopting if this, then that strategies and objective measurements and statistical edges and learning how to backtest and going through all the steps. It's really, really fascinating. It's been my life's work for a very long time, and I'm really, really pleased to share it with you guys. So, with that being said, I also want to thank this month's crypto comment giveaway sponsor, Spectre Security Coin. Make sure to go check them out over at spectresecurity.io. And of course, I always forget to slide this baby over. But let's go over and give away some crypto, guys, because we do give away 8,000 Spectre every single day on this channel while we do it. And here we go. All right, back over here in the live scene, guys. Of course, thank you so much to Spectre Security. We're going to have the YouTube random comment picker, and we're just going to load the comments for yesterday's video. And yesterday's video was, the Bitcoin crash continues. Is this the end of the bull market or just a pullback? You tell me. 34 potential winners. Thank you guys so much for the active comments. We are continuing to grow massively here on YouTube, and we could not do it without you. So make sure to subscribe. Make sure to hit the thumbs up button. It does help us grow and gets this information in front of the eyeballs that need to see it the most, unless you would rather have your friends and family listening to some other YouTube crypto personality. I don't know. Maybe it's possibly. Let's see. Oh, no, it was a spam comment. Oh, no. Did not clean those up. Let's see here. No, I think that's also a spam comment. Okay, here we go. That looks like a real comment. A LoneRanger says, looks like you're into owls. They kill and eat their own. Are you part of the Brotherhood Club? Did you know symbols will be their downfall? You know, this seems to be coming from the realm of Illuminati, wishes and fishes, conspiracy theory type stuff. You know, just to give the TLDR, Wise is my last name. Therefore, the owl is kind of the family crest that my family has assumed. I've actually tracked my genealogy, at least on the part of my family that I know, all the way back to the fatherland. And we did have a different crest at that point in time. Of course, wise or Weiss in German can mean either white or wise, i.e. intelligent. And so there is a lot of differentiation. It's very, very difficult to determine what tribe you actually come from because, as with most old languages and most old history genealogies, they take these very catch-all terms like Weiss, wise, white, and it could be, White Mountain or White River or White Town or, Wise Mountain or Wise River. It's very difficult, you know what I mean? And then when they come over to America, typically because we're just like, Weiss Gehungahat is like way too long. So we're just going to chop that down. You're Weiss now. We don't like that pronunciation. It's wise. So yeah, this huge amalgamation. But anyways, over the last several generations of my family, a lot of them have been small business owners, and they've always used the owl crest. So I've got tons of business cards from older generations of my family, and placards and logos and corporate seals and things of that nature. And they always used the owl. So therefore, I carry that legacy forward. But thank you so much for the comments. And hit me up in the Discord, my friend JustinWise5696, and I will tip you some crypto. Let's get into the live scene, and let's pull open your comments and start talking about you guys. And we have a new indicator to talk about today. Let's see here. Hopefully you guys are doing well. Who do we got all in here today? We've got, of course, Jose Canetta, Ken D, good to see you, my good brother. Wendy Brown Eye, DarkRico, the black sheep of Kang says that Kirby guy is always wrong. Sometimes. Thomas, how you doing, my friend? Crypto Jack, the one, the only, the infamous cracking cryptocurrency moderator. So glad to have you here. MT Coiner, Ron Legato, Mr. Ether, of course, the one, the only Mr. Ether. Make sure to go check him out on Twitter. He is killing it over there. Henry, Cape Town Brown Agency, good to see you, my good friend, even though we vehemently disagree about a BSV. And of course, Da Vinci is in the house, the one, the only analyst over there, always killing it on those altcoins and Bitcoin in general. Hopefully you guys are doing absolutely fantastic. Yes, we have a new, I haven't switched over, sorry. This button? Yeah, I don't know. Oh gosh, darn it. Fire this man. There we go. Yeah, I don't know if you guys are aware, sometimes live streaming is hard. We have a new indicator to talk about today. This is an indicator that I have not released yet. This is Parralox. Now, it's not as, here's the thing. In the realm of indicators, there are two approaches. The first approach, which I have gotten into more, and I think that more people will get into as they progress with using objective technical indicators, and that is, we want to understand how indicators are programmed. We want to understand their logic. We want to understand the maths. We want to make sure that everything balances. And that's absolutely fine. But then the way that I was for many years is I did not care. I was just looking for indicators. I didn't care if they were measuring the length of Cthulhu's tentacles or the volatility of an asset or the differentiation in price, the relative strength of a price, if you will. I did not care. For many years, I didn't care, and I was still a consistently profitable trader. So the way that this indicator works is by measuring, it's called Parralox because it measures two parallel aspects of price. They are two different relative momentum states. One is measuring waxing momentum, one is measuring waning momentum, and then there is an algorithm that pits them against each other, and whichever is dominant at any point in time is the overall direction of the trend. This can be utilized in two ways. This can be an initiator, this can be a confirmer, this can even be a baseline. It just depends on however you would like to utilize. Yes, that's right. A baseline does not have to be something that goes on your chart. It just most typically is. Now, if we just take a look at this nice, beautiful baby right here, we can see that with few exceptions, even if we scroll back on the daily, yes, it kind of looks like my heart rate sometimes after a few cups of coffee. You'll notice right there. Dum, 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 dum. Okay. Is Parralox the Green Lantern's arch enemy? I don't really know. I just, I have this kind of penchant for picking names out of random orifices, and then they tend to work. But anyways, I digress. This indicator is very not very not, what's the word I'm looking for? Come on, words, come to me. Not subject to a lot of chop. It's very clean. It's very technical. It measures the overall trend. And with very few exceptions, It does not give many false signals. And that is really what you want out of a trending indicator. You do not want it to be flipping on you and giving you a ton of divergent signals in a range. So I just want to point your attention in this particular instance to the range. So Bitcoin, obviously, we know topped on June 26, 2019. And then it entered into a long consolidatory range, which we just broke down from over the last few days. Of course, we talked about that. And you can see that we only flip direction in this trend. We are obviously long, and this gave us the long signal on the 13th of June and had us in a long trade, and then did not have us out of a long or looking to go short until the 29th of June, 2019. So you do want to be using this, with an exit indicator, something that's a little bit more sensitive. But of course, that is a good capture of the trend, better than a lot of people did. And you can see that with very few exceptions, it only trend flips you about 4 times, maybe 5 times throughout this entire trending area, as opposed to something that is more sensitive, something like Minx, where we do flip, quite frequently, where we flip about 7 or 8 times. So it's less sensitive, and it is better for determining the overall trend. And I think once I get this released, there's a few. There's no the code is fine. There's no logical errors in the code. That's always the difficulty in taking an indicator that I might use in isolation and then making that available for many people to use, is ensuring that there's no logical errors in the code, that everything processes correctly. And then kind of the difficulty comes from making it user friendly. So adding in alerts, adding visual alerts on the screen, for example, sometimes bar coloring. Although I think I'm going to be trying to steer away from that with future implementations, because the way that TradingView works, when you start incorporating bar coloring, if you start incorporating multiple indicators on your chart that are all trying to color bars, for some reason, TradingView just has a seizure and doesn't really like that. And so I get a lot of complaints. They're like, hey, this bar is coloring wrong. I'm like, well, do you have another indicator on your chart that is also attempting to bar color? I can't fix that. That is TradingView's problem. You're just going to have to contact TradingView support and tell them to program their Pine code better. But I digress. It's still probably the best that we have, and it's going to be the most commonly used tool for most people, because what are you going to go use? MetaTrader? Hell no. Okay. Wax on, wax off. Moving right along. Let's talk about Bitcoin's price. And so just to highlight Parralox here, we do have a short signal coming in on the 8th of September. And again, yes, that name is subject to change. Maybe Parralox is a little silly. I kind of like it, so, and I made it, so whatever. 8th of September, we do get the short signal from Parralox, and it does keep us short, not giving us any flipping. Now, of course, we did notice over here that it will take a little bit of inverse momentum for it to flip, for it to flip direction. That is a very M1 Lanchy. I think I got that right. Thanks so much for the sub on YouTube over there. Welcome to the community. Now, here's the thing. When we're looking at Bitcoin's price, I'll just give you guys an update on what I did last night at the daily close. I did go ahead last night and I closed my Bitcoin short. So my full risk short is now completed. I was able to capture a little bit more than 50% in profit, actually, of this overall movement to the downside. And that's because of scaling out. As I've said, you're never going to realistically capture the breadth of a movement, and that's okay. As well as EOS, I was also short on the dollar pair for EOS. And now I'm not saying that I think we're going to bounce from here, but there are several things that I just think it's probably a logical area. I looked at the chart, I looked at everything that's going on, and I felt quite happy with the profits that I had gotten from this. And I do feel that it is time to go ahead and scale completely out of my BTC USD short. Now I am still hedged, so I still don't have any long exposure. I don't think that it's appropriate at this point in time to be picking tops and bottoms. As you guys know on this channel, I do not like picking tops and bottoms. I think that that is the worst thing that one can do. And while there are reversals that I will trade, they are not the types of reversals that you have probably been led to believe are the profitable types of reversals. You do not pick tops and bottoms. When you pick tops and bottoms, you are entering into manipulated waters, right? That is the realm of scam wicks. That is the realm of very tricky money management, because the propensity to have one stop loss hit becomes very problematic. So I don't like to pick tops and bottoms. There are reversals that work better than others. Don Candon, thank you so much for the 20 crones, my good friend. And he says, howdy, looking all gussied up today. Just for you, baby. I put this on just for you. It's actually been a while since I wore my HODL shirt, so I wanted to wear the HODL shirt right here and just kind of convey the idea that even with all of the negative price decline, even with all of the negative price decline. Still very much a strong believer in Bitcoin. I do have a lot of conviction that we will see much higher Bitcoin prices, given the market plenty of time to work itself out. As an investor in Bitcoin, as an investor in a few, with many exceptions, but few other cryptocurrencies, I do have quite a lot of faith in this industry. Otherwise, this would not be the Breaking Bitcoin show. This would be the Breaking Precious Metals, Forex, and Stocks show. Almost felt like they need to say Bitcoin in there for some reason. Right. So anyways, by the way, let me know how you guys like the intro screen. I did make that this morning, so positive reviews are helpful. Anyways, so I did close. I don't have full risk exposure to the downside. I'm still hedged, so if price does move down, I won't lose any money. I just won't make as much money as I would like to. Now, I think it's probably the best to start off today with looking at what our indicators are saying. So let's go over to Minx, of course, first. And we can see here that on today's candle close, Minx will be curving back up into static. This is going to be an early exit signal. So this does justify my decision a little bit. Of course, I did pull the trigger a little bit early, but Minx is now confirming that movement. Of course, when we do move from below the static level into the static level. So when we cross the noise line, when Minx crosses the noise line, that is going to be an early exit signal. That is telling us there is a good potential to see converse movement. In this case, that would be movement to the upside. And of course, I'm not really taking the wicks into account I know a lot of people are looking at that. Obviously, what do we see when price is at a low bottom area? We often do see a lot of wicks. But the reality with that is you see a lot of wicks anyways with Bitcoin. You see a lot of wicks anyways with Bitcoin. So I don't really think... And why do you see a lot of wicks with Bitcoin? Because of volatility, because it is a low overall compared to other assets. It is a low liquidity asset. So there's just literally no way to get away from the wicks. It's impossible to get away from the wicks. Now, we do have still from Wada Atar explosion, we do still have negative momentum to the downside. So this is still telling you you're good to go. Volume is okay to the downside. So should we get another signal to the downside, a continuation signal, what would a continuation signal be like? Well, that would happen if this line right here goes from up here to back below the static level. So something like this. If Minx does cross back below the noise level, then that is going to be a continuation signal. And I would be looking to reshort because that would be, for me, a movement a little bit lower, down to that $7,400 or potentially even the $6,400 level, as I've talked about. Now, I don't want you to, looking at the daily chart, I do have this line right here, this upper green line, that has nothing to do with daily support and resistance. That has nothing to do with daily supply and demand levels. So that is, of course, I was plotting out the intraday trades here on the 15-minute time frame right here, and I was plotting out the median of price action. And down here on the lower time frames, we can actually see a few things here that I'm going to kind of reference here in just a little bit. We'll get back to that here in just a second. So back to the daily, the only lines here that I think are germane to talk about at this point in time, when looking for bounce targets, are going to be, of course, that 74.32. We did talk about that at length yesterday. Why is that an important area, or why is that significant in any way, shape, or form? Because it is a logical long stop loss area that is also, if we look back over here, I would say the median of price action during the 2018 flooring phenomenon, when we did find that bottom, the floor of price action in 2018 at around the $6,000 level. So I'd say that 7,400 is a good median for that. And so medians are obviously important when we're looking at reversion to the mean strategies. And we can see the import of that. Of course, we talked about this. Now, it did only occur on one daily candle, but in 2019, when we began the bull market in 2019, this was really the early stages of the bull market. Of course, this is going to be May. This is after the significant breakout candle on the 1st of April, but really the next significant bullish movement. We did hit that line right at 74.32. You can see that right there on this candle on the 10th of May, we did hit that. We did have a little bit of initial rejection, and then we broke it. That makes that area a bullish breaker, and we do have confirmation if we just scroll over here. Sorry, let's just zoom this out a little bit. And we can see that breaker territory actually is coming in from that 74.32 to about the 72.70, maybe $7,300 region. So that is going to be your breaker zone. We've talked about breakers before. Make sure to be a regular viewer for more information. Now let's make sure that we're autoed. Okay, so I think that that's an important level. And really, you guys know that I'm not the biggest fan of trading in this method. But when we're looking for support in a parabolic movement, it's very difficult. So we really don't have a lot to select from here. And as I said, you don't want to be calling tops and bottoms. You want to be identifying key areas of supply and demand, because Bitcoin as an asset does respond to supply and demand. And it's not, it's not something like the FX markets where it's just completely prone to manipulation and there's no such thing as supply and demand. Okay. But we really have slim pickings when we're looking for bounce targets here on our higher time frames. And again, so 74.32, logical stop loss area. It's where price has bounced around before. We did break through that area, retested as support once, not twice, and then kicked off for the last parabolic movement of the 2019 bullish ascent. So I think that's a logical area as well. And you can just see anytime I see something like this where I have a lot of lows that have not been raided. So as you can see here, here's the raid, right? And really, it's not even a raid because there aren't stop losses placed here. This is more of just, a highly volatile retest of that support level. We break and then we retest and we end up closing right around that level. Spend one candle below it. But again, we're still in that overall breaker territory. I just don't have the lower green line there at that $7,200 area. You can see that we actually don't close below 7,200 on that candle. We closed at around 72.58. The low is actually 72.05. The low is the 72.05 on that candle. But then we're right off to the races. We have one brief fake out, we come back, bounce off that level, and then there we go. All right, so I think that's the first area that I'll be keeping my eye on, 74.32, seeing if we can get a bullish reaction off that level, and then of course kind of waiting for a good reversal signal, or at least, and then a little bit further out, maybe looking for but definitely looking for a trending signal. So that would be my primary indicator, giving me a trend signal, because trending trades are always the best to take. And that's going to probably take a while, because it's going to take a little bit for Wadatar explosion to flip bullish again. And I'm going to need to see that to be taking a trending trade to the upside. Again, it's very difficult to be bullish on Bitcoin at this point in time. And as I said, calling tops and bottoms is not the way to go. Calling tops and bottoms is not the way to go. Bitcoin moves with such volatility that you don't have to take the risk of attempting to identify tops and bottoms. It is a fool's game. You're not going to do it. Nobody does it with even a close level of accuracy. Not for a very long period of time. And when I say everyone, I mean that 99% of people. There are going to be a very small percentage of people out there, and I've met maybe two in my entire lifetime, who have a just ridiculous ability to actually call tops and bottoms. And this channel is for people who want to realistically trade and did not grow up in Montessori. So, and I really don't think that it's has anything to do with intelligence. I think that there are just a few people who are naturals and all kinds of things. And again, I would assume that would be naturals at predicting the future. So maybe we need to hook them up to something like what's Cerebro. We found the Charles Xaviers of the world. Now, moving on, looking beyond that, I don't see any support until down in the $6,000 area. And I've made the case for that multiple times. That's obviously our point of control on VPVR. And of course, that is going to be the floor of the 2018 consolidation period, right? And interestingly enough, I think that there is quite a lot of significance. You will find in cryptocurrency that often where wicks go is very telling of where price wants to go. And that wick that we had on that candle that I just observed here, where we do end up breaking on this candle above that order block and then come down and test that zone, that wick goes all the way down to 61.78. Wicks typically tell you where price wants to go, or where there's very large iceberg orders sitting in the order book, whether they're hidden or not. And typically they're hidden. That's why they're called iceberg orders, because you only see the tip of it. Very similar to my dating life. Now, moving on, we have that, again, that's 61.78. We have that high volume node coming in right around 6,400. So I think if we do end up violating the $7,400 area, then I don't really see price stopping until the $6,000 area. So that will be, I'll obviously be getting a trending signal to the downside, or a continuation signal to the downside, to re-enter into more short exposure at that point in time. But as it sits right now, you have to know when you've gotten a good thing, and obviously hitting about a 20+% trade on Bitcoin is a good thing. Hitting a 40+% trade on EOS is a good thing. You have to be happy with that. Time to close out, take profit, and wait for the next movement, because again, we've seen the slowdown of momentum. The other thing that is influencing my decision as well is the fact that we are moving into the weekend. Weekends are typically quite bullish for Bitcoin, and I just don't really feel like sitting through the drawdown, and I'll wait until Sunday evening, until the CMEs open back up, until the Forex markets open back up, because that's typically when we see movement. Because there's something that we need to talk about, and I don't think we talk about enough. We are trading, and because where's the best place to start with this? I thought I was married. No, I am not married. I am a single human person. I'm a single father. I am not married. I am a single father. All right, so welcome to my life. Now, stop it, Mr. Ether. We don't talk about this enough, and I think this is really, really, really important to talk about because maybe this is something that you've never considered before, and this is probably going to be because you've never traded FX markets, foreign currency markets, Forex. And so when we talk about trading Bitcoin, people assume who have not traded foreign currency markets that you are trading Bitcoin against the dollar, and the dollar is some static entity, some static value, and that Bitcoin always drives the bus, right? So most people assume that I talk to, assume that when they're looking at the BTC to USD chart, when they're talking about price, when they're charting price, when they're taking things into account, that Bitcoin and anything related to Bitcoin, Bitcoin news, Bitcoin events, Bitcoin manipulation, Tether, whatever, that those are the only things that drive price. And I'm here to tell you that that's not true. You have another currency in the equation. You have Bitcoin, which is a currency, and you have USD, which is also a currency. And currencies are traded on the open market and appreciate or depreciate in value. If you want to understand, if you want to look at the value of the dollar, some popular methods are going to be taking an amalgamation of what the dollar is valued against all other foreign dollars, and you can just see that rise and spike. You know, if you guys would like, maybe I can make an indicator for that. But I think that I don't think that that's that's just an interesting topic. And I kind of challenge you guys with that. I think if you want to be a trailblazer, and I think if you want to have some leading indications on Bitcoin's price sometimes, I think you need to stay on top of the foreign currency markets, and I think you need to stay on top of world events. I don't think that it's necessarily Bitcoin news that dramatically affects Bitcoin's price as much as people think that they do. I think that it is global news. I think that it is equity news that influences price more, because that is when the dollar will step in and drive the bus. If the dollar is now more valuable against other foreign currencies, then you're probably going to see Bitcoin to the dollar move down. If the dollar somehow suddenly loses value, for example, I think Bitcoin did quite well with the trade war between China and the United States. And I think that Bitcoin has largely moved sideways, and to a degree, I do kind of agree with Thomas Lee on this. I think that there is an element here where Bitcoin has moved sideways, largely in part to the equities markets moving sideways. Very low volatility from the equities market. So now, of course, Thomas Lee believes that we are going to see a large spike in the U.S. equity markets, and he thinks this is going to be good for Bitcoin. It's possible because he is kind of looking at this correlation in a different way. And potentially this is less true on long, so again, let me qualify this a little bit. I think that for the larger Bitcoin movements, the larger trending Bitcoin movements, I think that that is largely tied to what's going on with Bitcoin. But a lot of, I would say, not just intraday volatility, because a lot of that's just market making, but some of the micro swings, and of course contributing to some of the macro swings as well, but to less of a degree than Bitcoin news. I think that the dollar news and what's going on with the dollar is a herald of this. So, I don't think it's a coincidence that you see Bitcoin's price dropping. And of course, there are technical reasons for this as well, but I don't think it's a coincidence that you see Bitcoin's price dropping when Trump is kind of going, when the information is coming out that the U.S.-China trade war might be coming to a close, and that's a lot of strength for the dollar. Of course, you can see the Chinese renminbi to the dollar devaluate because it did revaluate appreciate over the last little bit of time. And ever since the news has come out that the China trade war might be coming to a conclusion, the FX markets have done some crazy shit, especially with dollar pairs. So trading dollar pairs in Forex are always very squirrely. They're the pairs that are the most difficult to trade for whatever reason. Precious metals less so, but anyways, I digress. Just laying low. Stop it. All right. Okay. So moving on from that slight divergent topic, let's look at a few other things. Below the 30-period Donchian, by all rights, one should be looking for shorts only. However, as I said, risk off because Minx has crossed back into the static level and will be closing that way on this candle unless for some reason we see a significant down move. And I don't think that that's likely. Moving into the weekend, I think now, obviously, coming towards the conclusion of Friday. So here in a couple of hours, so around the 3 p.m. to 5 p.m. marker, really the 2 to 4 p.m. marker. So probably right at the conclusion of the show, maybe lasting for a couple hours. There is a higher propensity to see some intraday fuckery because that's just how Fridays tend to go. You have the markets, you have the foreign currency markets closing down. You have the CME markets closing down, and all of that occurs on Friday evening. And then they open back up on Sunday, and they're closed for the weekend. So no rest for the wicked, because here on the cryptocurrency spot markets, we never get to take a day off. But that's okay. We do take the weekend off for the show because family is important, but we trade 24/7. Well, not 24/7 because, you got to sleep on Sundays. Now, so areas I think to watch for, just to repeat myself, 74.32 and 61.78 should that fail. What do I mean watch for? Well, see if those levels get hit. See if we get some bullish price appreciation off of there, and see if your sensitive trending indicators start giving you a signal. And if so, it's worth throwing the jab for the long. And then when you get the less sensitive trending indicator, you can scale further into a more significant trade. We don't have anything whatsoever signaling along, and we actually don't even have a cross up from our primary exit indicator right here. We don't have a cross up on time transformation. Now we are getting our fourth green dot of life, just letting us know that price is oversold. Oversold is not a bullish indication, especially when you're breaking out of a trend. Typically, that just means, hey, chill out. The direction is to the downside, but you should wait for a bounce. So we'll see what happens. I would still overall be in the mode of looking for this to eventually hit one of these two targets, but not in a straight line down. Price doesn't move in a straight line down. Again, confidence on this is about 60-40 right now, but I do think that the more likely scenario is over the course of the weekend and perhaps progressing into next week to see a little bit of consolidation. And listen, what I'm going to draw right now with this marker is not anywhere near what I think price might do. It's just an amalgamation. Consolidation and a little bit of a climb for the races. Now, I'm not sure how high or how strong we will go. Potentially a retest of 9,000, maybe even 9,300. We do have, of course, our 30 period Donchian sitting at 9,341. And so, of course, a movement from 8,000 to 9,300 is valid to trade, even for a trend trader. That's a worthy trade to take. And again, call it what you will, a reversal if you want in that sense, or a sensitive trending indication. Either way, I think that's a valid trade to take. And then we'll wait and see what the reaction looks like off of that level and potentially look to scale back into the short to eventually hit one of these two targets. But as it sits right now, low exposure. I don't really like taking a lot of high risk trades on the weekends. Typically, if I do enter into any trades for the weekend, they're low risk. I will say this, altcoins have been holding fairly strong. A little bit of a mixed bag on this over these last few days. Of course, they had a massive drop with Bitcoin, and unlike Bitcoin, they have recovered quite a bit. Some more than others, but majors don't look too bad looking across the board. So I would say that party is likely coming to an end. Again, I think that once we see a bullish move from Bitcoin, and I think it's quite possible that we see a green candle here on Saturday, then all those altcoins are going to lose their gains because they're trading against Bitcoin, and if Bitcoin's price goes up, their price goes down. So I would be cautious on that. I would be looking to take profits on your altcoin trades. If you guys grabbed any reversal trades off of the lows, maybe you're up 5-10% on some of these coins. I would definitely be looking to scale that profit out, set a trailing stop loss, or just move your stop loss to break even. Absolutely. If not, just close out your positions, because I think that party is likely to come to an end. And it's not going to be until next week where we get some strong definitive idea of, is this going to be a movement back up to 9,300 and then a descent down? Or is this it? Because that is also a possibility. So as I said, the smartest thing for me to do, and what I actually did, was just close, wait, be patient, sit on my hands, and, vacuum my house. Ferguson says, Bitcoin has been known to blow right through resistance. Cough. 6K. Cough. This is true. Okay. Let's go down to the lower time frames. And we will look at lower time frame price action. All right, so let's take, actually, I think this line is a little stale now, but let's bring up the VWAP and we'll kind of just talk about intraday volatility. Now, the last intraday trade that we talked about, not yesterday, but the day prior to that, we did talk about, we are on the Bitstamp chart here, so I want to make sure I get this right. We did talk about, I want to make sure I get this right. Sorry, yeah, here we are, back over here on this day. We did talk about this trade right here. We had pointed out this level right here. I know that's not a very straight line, but we did point out that level right there. And we talked about the 3 targets for that level. Or, excuse me, that was a terrible one. Jeez, got my hand steady like somebody with Parkinson's. We talked about this target right here. We talked about this target right here. And obviously we talked about where the DWAP, the VWAP chunked down, which is right there. Did only end up hitting the first take profit on that long scalp. And again, not something that I took. Not really something that I'm into right now based on where price action is. But of course, that was a trade. Then we didn't end up hitting the stop loss right here if you would have moved your stop loss to break even. And we did have some lower price appreciation based off of that. Now, looking at where price is right now, we do have this right here is according to this right there. There are 2 schools of thought on order blocks, and there is the way that I do order blocks, and there is the way that a lot of other people do order blocks. Now, I don't really like that way, but I'll point it out for the purposes of this analysis. This would have been a fill zone right here. Why? Because we established an order block right there. So the way that these order blocks work, the reason I don't like it is because it's very confusing. But the way that it works is like this. So we have a low, and then we try to move up, and then we have a down movement, and that down movement stops. So this is kind of synonymous with my, you have a range. What is the median of that range? We like to see a higher low that does not violate that median. I talked about this the other day in the realm of price action. But this is also, according to people like ICT, according to people like Trader Dante, this is their style of order block right here. So they would have been identifying this order block once they saw it, and they'd be looking to buy anything in that range. And once they get filled, once that level has been in their terms rated, this is where their stop loss goes. Their stop loss goes right there. So if one was trading that style, one would have gotten filled right in the 78.80 to 79.23 level, and their stop loss would be right there, right below this low right here. Again, a little bit below 78.80, maybe around 70, 78.75, give or take. I don't really think that's the thing to do. I think that the thing to do is wait for this range to break. There have been a few profitable trades. If you are somewhat successful at trading this range, of course, there have been 3 to 5% movements. So you're getting on average anywhere from, maybe honestly, realistically, knowing the statistics of most, intraday volatility traders, you're getting on average about 1 to maybe 2% on these trades because you're not catching the bottoms and the tops. But there is opportunity here for intraday trading. I don't really see any good setups that I would want to take just right now, just looking at price action. So I'm going to kind of leave that to you guys. Just looking at this, I think the logical one would have been a long getting filled right here. And where would some decent targets on that be? At this point in time, with kind of this diminished volatility, I think the first target would be right here. This is where VWAP chunked down on the daily right here. And kind of your dynamic level of resistance. Second target would most likely be right here, where VWAP chunked down again. And then I'd be out. And then I would probably be out of the market for that day. I'd consider that a good trade. Getting filled here and taking the trade up is going to give you about a 6% trade, and that actually is going to let you capture the majority of that movement. Of course, you're going to scale out 50% profit here, so your actual profit is going to be somewhere around the median. So maybe something like, maybe like 4, maybe 5.5% if you're really lucky. Depends on how you scale out. So I leave that to you guys. This is not the intraday volatility channel. This is not the intraday trading volatility channel. This is the trend trading channel and the overall macro direction of Bitcoin channel. And then sometimes me ranting about various topics like the dollar and these darn kids with their rap music. What's better, the hourly chart or the daily chart? It depends on what you want to do. I think that the daily chart is where you want to start. You're going to get less signals, all right? So, and for most retail traders, that's what they want to do. Most retail traders want to be taking maybe 3 to 4 trades a month that have a high probability of success. And you're going to get that on the daily chart. You're going to pay very little in fees. Slippage is not going to be much of an issue. And when you start going down to lower and lower time frames, slippage becomes a real issue. Fees become a real issue. The more you trade, the more you're going to be wrong, right? And you're going to pay for being wrong, right? So you have to, we teach all this in the back testing course. So, it's a very, very careful balance of making sure that your hit rate in live trading is justifying the extra risk that you're taking, the extra fees that you're taking on, and the risk of slippage that you're going to be taking on, because that is a real concern when you get into trading on lower time frames, especially like the 15-minute chart. It's just not, people look at these charts and they see these 3 or 5% swings. It's just not as sweet as you think, man. It's not. It's really not. This is bots and algo territory, man. What's up, JT, my brother? Okay. Generally timeframes that I like, kind of once you become accustomed to the daily and you do want to start getting a little bit more active, if you are looking to spend, to be a day trader, so to speak, to spend, 4 to 8 hours a day sitting in front of your computer and trading, I think you want to start developing a strategy for the 4-hour time frame. It's probably going to be the second most popular. Of course, one of our analysts hates the 4-hour time frame. He loves the 3-hour time frame, and he has this theory that you get your signals an hour earlier. I don't know if I necessarily agree with that, but it works for him quite well. I don't really like the hourly time frame. I like the 2-hour time frame. And then I pretty much do not like going below that. I think there is success to be had on the 30-minute time frame, but again, you have to develop your system each tier down, and you have to realistically look at factors like fees and slippage, which once you go below that 2-hour time frame, that becomes a very significant factor. And that is what throws the monkey wrench in most algorithms. So what have we seen here? Also, I talked about this the other day too. What we have seen is that printed low get rated for stops. And this is a concept that I've talked about in other aspects as well, which is to not buy the first bounce. The first bounce is for suckers. Well, really, it's not for suckers. It's just not for retail traders. Because most people, when they buy a bounce and they think they've got a low price, they tend to hold it and have a reversion to the mean type idea where we're going to go back to a baseline or something like that. And on the first bounce, that's typically not going to be true. People are looking for that V bottom, and those happen far less than bounce. Stops get, bounce, retail traders buy. People actually take profit on this movement up, like bots and algos, and then those lows get swept. This is typically where you see larger market buys come in, and then price can actually make a movement. And at that point, a lot of retail traders are debilitated and been kicked out. But you can also see successive sweeps and again, because the difficulty here is determining what is trending and what is consolidation and wick effery. And I do want to point out, it's very hard to not notice this. Parralox, which is my new indicator, tells you to go short right here, and has kept you short pretty much this entire movement. Captured literally all of it. Now the daily got you short right around the same time. Daily had you short right here too, but just beautiful. Thank you, Crypto Caveman. Highly appreciated, my good friend. All right, it is 12:48, and as usual, we have talked about Bitcoin for literally an hour. Okay, so, in the realm of this, let's talk about, some popular theories about the Bitcoin price decline. So this is an article from Cointelegraph, and this says Bitcoin price 8K bounce now aligns perfectly with the stock to flow chart. And I read this article kind of in preparation for the show because I kind of wanted to talk about the stock to flow model. But the reality is there is like one sentence in here. Right here. There is one sentence in here that talks about the stock to flow model, and the rest of the rest of this article is just prices are down, right? So, we'll read this together. It says, Bitcoin escaped a fresh dip to 7,500 on September 25th, avoiding the worst scenario analysts had warned about before its major crash. Well, where did you pull that number from? Like, where did 7,500 come from? Explain that to me. Bitcoin circles 8.3K halving prediction. This says data from Coin360 showed the largest cryptocurrency pairing. Some losses between 8,000 and 8,500 on Wednesday. Previously, Bitcoin had bottomed out below 8,000 on some exchanges, capping a nightmarish 12 hours in which the pair shed almost 20%. Previously, one trader warned markets were set for a dive to 7K levels. But you've also had like 90 traders talking about, $6,000 levels. You've had traders talking about $8,000 levels, $9,000 levels, $7,000 levels. All of this like hindsight. Oh, my fib line was right. Oh, my triangle broke to exactly the measured move. It's all crap, man. None of that's real trading. That stuff only works in hindsight because all of these traders that do this stuff don't just have 1 or 2 lines on their chart. They generally have about 15. And so, yes, probably price might have the possibility to bounce off of one of your lines. And the moment that it does, guarantee you, they take to Twitter and say, I told you so. Don't you see? I drew that fib. Come join my, come buy my product. It's crap, dude. It's not real trading, man. It is the most, in my opinion, despicable form of analysis out there is this hindsight nonsense. And these people are not most of these people who want to call tops and bottoms and price targets and blah, 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 have so many lines on their chart. It is beyond ridiculous. No sane, rational person can actually form a game plan around that. And they're not accountable when they're wrong. Kind of like this plan B thing where he's got, price, plotted out for the next 2 years. We'll wait and see if you're right in 2021, man. There's no accountability for being right. No accountability for being right. And that's not good. Various theories soon emerged about what caused the rout, including a $1.2 billion transaction on an exchange, which could have sparked market panic. Yeah, we've seen about like 17 of those when Bitcoin was consolidating, and it didn't cause that. So that's nonsense. Proponents also dispelled rumors that a previously alleged drop in Bitcoin's hash rate preempted the price decline. As Cointelegraph reported, hash rate charts displayed a 40% drop earlier in the week, but commenters subsequently said the readings were inherently inaccurate. So again, that is assuming that the market is, so that's stupid. That doesn't make any sense because the hash rate did drop significantly and the market will respond to that. It doesn't matter if you come out after the fact and you're like, well, no, man. If you actually understand hash rate, you'll see that doesn't actually mean anything because that is a lagging indicator of hash rate. It doesn't matter that the difficult. So just to let you guys know, there is the difficulty increase that is coming in on Bitcoin is going to make S9s unprofitable, right? And a lot of miners are still mining with S9. So a firmware upgrade was released to make the S9 squeeze out all the efficiency that they possibly can. And this allows them to significantly reduce their power wattage per use and actually make the S9s profitable with the difficulty increase that is coming up for Bitcoin. Now, because of that, miners around the world are feverishly upgrading the firmware on their S9s to have this new efficiency. In anticipation of the difficulty increase, at which point at that moment their S9s will no longer be profitable. So I think that's probably the most significant reason why the hash rate dropped suddenly. Because, for example, if you just have any kind of Bitcoin node connection, you would have seen outbound peers increase while noticing a lot of nodes drop off the network. So hash rate did decrease, and the market probably did respond to that in some degree. You had a lot of confluent factors that happened to cause price decline. But again, you didn't need to know any of that. It helps to know some of that, but the chart told you to go short anytime around the 17th to the 22nd. Very simple, clean and objective. And then you can be like, well, of course that happened. But again, would you rather be right or would you rather make money? I think we all agree. So, so the fact that, because most people don't understand anything about hash rate. Most people had no idea. You probably, no offense, but most of you probably had no idea about the S9 update or that they would be unprofitable with the BTC difficulty increase. Well, that's true. And so the majority of traders out there also don't know, and they're just responding. They're just responding, right? So it says, now attention is turning to the run-up to Bitcoin's 2020 block reward halving event. Yes, the 2020 block halving event, the block reward halving event. Yes, yes, ladies and gentlemen, where Bitcoin will finally reach its all-time highs. Yes, in anticipation of the halving, as we've seen every year. Hooray, yippee, woohoo, yes, yay, awesome, sweet, cool. Now, I don't think we want to discount that, but I also just want to, trade the technicals, don't trade the fundamentals. According to analyst Plan B's stock-to-flow model for Bitcoin price, which has traditionally given accurate predictions. You mean when he released it like, a while, like a couple months ago? Like, so it historically gives good results, right? So there's no repainting in his system? Right, yeah, of course, probably. The mean Bitcoin price in the run-up to next May is $8,285. As such, under current conditions, Bitcoin is no longer trading higher than its planned levels in a year's time. What does that mean? Well, of course, if his model is correct, then that means that any price underneath the median should be bought, right? And any price above the median should be sold. This is basic reversion to the mean strategy, right? Buy below the median, sell above the median. And then they go on to talk about back. They go on to talk about Bitcoin, Craig Wright's vision leading the altcoin crash, crashing about 25%. We've seen worse. It will continue to see worse. So just wanted to point this out, man. You got to be, I read these articles and you got to read them with a pretty discerning eye because, again, Cointelegraph's just trying to get clicks and eyeballs. And, hey, you guys have seen my thumbnails. We're guilty of the same thing. But at the end of the day, this says Bitcoin's price, 8K, now aligns perfectly with stock to flow chart. I mean, you mention it for one sentence in here, dude. Literally one sentence. Come on, dude. And then the rest of this is just price is down. Okay. Whew, I need more water. That wasn't enough. Live streaming is hard sometimes, guys. Maybe I just talk too much. Maybe it should be less talking and just maybe more some blasting techno in the background and like random lines on the chart. And it's, I'll just like leave for like an hour and it'll just be like, I'll be like some of those 24/7 streamers, right? My chart will just look like that. And then I'll leave and like come back and be like, yeah, man, Bitcoin. That's what I've noticed with most of the 24/7 streamers. But hey, more power to him, man. I respect the hustle. It's tough to do, man. Yeah, Bitcoin Swansong. Yeah, and hopefully you guys know, I do it for fun, man. Okay, so let's look at the weekly candle. And then we're going to take a quick break here. And before we do that, just a second here, gentlemen. Okay, let's go over and look at that weekly candle. So on the weekly time frame, where's kind of the buy-in target? It's super wide. Forgive me, but 74.32 to 61.78. Now, before we do that, and I don't think that you should be blindly buying in those levels. Again, that is the definition of picking a bottom. Don't pick a bottom. Identify a level, see if you see a reaction off of it, see if you get on the time frame that you trade on, whether either a reversal signal or a trending signal, and then go. Okay. But we do have some negative things coming in here on the weekly. Obviously, we have Minx signaling. Actually, last week was the first. Last week, Minx did give a short signal on the weekly. Okay. Now, Wadatar Explosion gave a signal above the dead zone, but not above the explosion level. But I know some people have modified their settings for Wadatar Explosion, so it's quite possible that they could have actually gotten a signal out of that. Kits, thanks so much, man. And then, of course, Parralox, actually on the weekly time frame, got negative right back here. So Parralox had you weekly bearish back here in August and had you short. Parralox also had you long from February, caught the entire bull market, and had you sell in July. And gave you one fake out week. And so there's a loss right here. There's just no denying that. But has you short off of this candle and has you short. So again, what is the purpose of this indicator? Would you guys like to see how long Parralox kept you in a short on the weekly time frame? The 15th of January, 2018, and it stayed short until February 2019. So, I don't know. You guys tell me. Seems like a pretty good indicator to me. I've done a lot of work on this. This is probably one of the most difficult indicators that I've had to code. And here's the thing. I haven't even added bells and whistles to it. But the logical code was beyond difficult. But I digress. Target hit. He just earned my sub. Thank you so much, sir. Highly appreciate it. Raffle. Do I see us bouncing here a little bit before continuing down to low 7K? As I said, and this is an annoying answer, I'm sure, confidence level is about 60-40, but yes, I think it's more likely. That's why I closed my short last night. Now, guys, prepare yourselves. Ad incoming. Shit happens, man. Try running your own live stream. Now, we're going to take a quick break, guys, and when we come back, we're going to look at the FX markets, and we're also going to break down the news of the day. But before we go, we need to talk about Bybit. Guys, I trade on Bybit. Very simple, plain and clear. I only talk about stuff that I actually use and that I actually think is good for people, okay? We've got just a few days left in September. If you guys would like to make the switch from BitMEX to Bybit, actually have customer service that will refund you if the exchange makes a mistake. If you are tired of contributing to Arthur Hayes' vacation fund, I'm sorry, what did they call it over there? The insurance fund? Right, yeah, okay. If you guys are tired of contributing to that and you guys would like to trade on an exchange that actually has good customer service and will not block you from trading with system overload, check out Bybit. If you use the link down in the description on top of the margin bonus that Bybit will give you, if you sign up with our link, they will give you an additional $100 if you deposit 0.1 BTC, an additional $200 if you deposit 0.2 BTC. I like free money. Everybody likes free money. Bybit.krakencryptocurrency.com or bybit.com/a/CC. We'll be right back in a few minutes, guys. Don't go anywhere. Let me know if you guys have chart requests, and we are going to be doing the foreign currency markets coming right up. We're not going to do all the pairs, but we're going to probably do about 5 or 10. So, and we're going to break down the current events of the day. See ya in just a moment. And we're back, guys. Hey, volatility bring new subs. Where did all the new subs come from? A couple hundred this week. Well, volatility, you know. We've been here for a very long time, and we just only hope that we continue to grow. We've already had explosive growth. You guys are absolutely fantastic. You know, I had no idea when we started this channel that we would have the success, that people would be really into the way that I trade, would be really into the way that I break things down. I'm not going to lie. We've made strides in production quality because some of the earlier videos were rough. And I was just kind of, sometimes I go back and watch them and I'm like, wow. But, you know, I've had thoughts to take them down, but there's a part of me that's like, hey, you know, those are actually, that's, you know, because I've been right about a lot of things in the past. I've been wrong about some things in the past. And all I can do is just be honest about, well, that's actually how I felt at that point in time about whatever topic that I might have been talking about. Okay, so let's go to the foreign currency markets, guys. I want to stay on schedule here. We'll look at the foreign currency markets. We'll do the news, and then we'll double back and maybe look at some of the other major altcoin pairs and kind of get an idea for that as well. Because I think there is some interesting stuff coming up that I do want to talk about. And I do think that altcoins are interesting to talk about. I don't think they're across the board down for the count. I think a lot of them are down for the count. But let's go to the foreign currency markets here and minimize that. And look at my open trades. I still only have the 3. I didn't actually end up putting on any new trades last night. We'll start off with the Aussie yen. And we'll bring up the baseline. There we go. Okay, I did kind of talk about the Aussie yen a little bit. More bullish on this, looking at that reversal baseline bounce. I did talk about having limit buy orders set at the baseline for the reversal baseline bounce. We have not seen that movement down toward that level yet. And we are kind of seeing a little bit of a bullish reactionary off of this level right now. Again, still overall looking at the Aussie yen, I'd still be more biased to the upside, but we don't have a strong signal at this point in time. Now, however, one could argue that we do, because let's think about this for a little bit. When we're above the baseline, when we talk about foreign currency, we're more bullish than bearish, right? So we are above the baseline, and we do have a couple things happening today. We'd be looking for a continuation trade. Continuation trade means volume is less of an issue. We do have minks crossing up into the static line, which again, What is that? That is an exit signal for a short. It can also be a continuation entry for a long. Now, I feel a lot more confidence when I see those cross-ups happen above the initiation level, above the 0 line in this case. But we also have our exit indicator. We have time transformation crossing up as well. And kind of deep into that, let's actually take a look and see if we can see any of that. Yeah, we actually do have hidden bullish divergence on this pair right here, where we have a low in price action right here, which actually was regular bullish divergence because time transformation does do divergence as well, auto-magically. We do have a higher low in price action, but a lower low on our oscillator that is hidden bullish divergence, meaning the movement to the downside has exhausted our momentum oscillator more than it did over here. Those are a couple bullish signs. I would be okay. I would understand the idea of looking to take that continuation long off of this. So actually for that purpose, I'm going to go ahead and add this to my watch list and take a closer look at this toward the close of the FX markets this evening. Aussie Kiwi, again, same thing. I would be more bullish than bearish on the Aussie pairs. We don't have that same nice signal coming in for Minx yet, but just looking at this, I would definitely be more interested in taking the long. And again, we see that exact same phenomena over here where we have this hidden bullish divergence. We have a low on our oscillator. We have a lower low. We don't actually have confirmation of that low because we don't have the cross up yet, just like we don't have the cross up on Minx. But this is something I would be keeping my eye on, potentially maybe the next candle. But as we sit, so maybe Monday I'll come look at this. So I'm not going to add this one to my watch list. But as we sit right now, I would still have limit buys right here at that 1.06826 level, right at the 30 Donchian. Aussie dollar. I would stay away from the Aussie dollar. Again, very squirrely about dollar pairs most of the time, and especially right now with just the way that the world is. Sometimes these things trade very clean, and just overall, I prefer to take those nice, clean, trending trades. And we've had a couple signals here for short trending trades, but I just haven't felt the confidence to take them on dollar pairs, and that's that just comes. We did talk about the Canadian Swissy. As you can see here, my live trades will be on the screen. I did not end up taking that long trade off of the Canadian Swissy. I just did not end up liking the way that it looked. And of course, again, that's kind of invalid to talk about because we don't necessarily look at our volume indicators for these continuation signals. But we can see that we're not even above the dead zone. So I'm not going to lie that did play a part of my analysis and my hesitancy to take this trade. And again, I'm kind of, obviously glad. This doesn't really mean anything to me. Yes, it's a little bit of a down movement. Would I be in a little bit of drawdown? Yes. But again, I still have my eye on it. I'm just not entering into a trade right now. Canadian yen. Canadian yen, exact same thing. We had that potential reversal signal over here on the 25th of September, 2019. One might have hit and take profit one on this. Let's actually pull up Quadrigo right now and take a look at what our stops and targets might have been. Now, we haven't quite hit our TP1. You came very, very close to it on the high of today's candle. So, yeah, I'm not going to take any action on this one either, especially with Parralox signaling for the short down here. Let's go to the Swiss yen. Now, the Swiss yen actually putting in a little bit of nice bullishness right here. Let's see. We don't have the continuation signal yet. We don't have that yet. That'll also be giving us a primary signal as well, crossing back above the initiation level right there. We do have it from time transformation, but that's just not good enough for us. And we still have Parralox telling us that the trend has not fully commenced to the upside. Euro Aussie. Parralox is just now going short. Minx is confirming that as well. But we don't have the, actually, we'd be looking for a continuation signal. So that is not necessary. So let's look at the Euro Aussie to go short on tonight. Euro Canadian, I am short on. The Euro Canadian, waiting for the exit signal to load up here. Haven't gotten it yet, so I will still be in the trade. No reason to exit it tonight. I'll let this ride and see how Sunday's open affects this. Euro Swissy, I am also short on as well. It is now finally moving in my favor when I did take the short. And again, kind of taking the short a little past, actually not really, because the candle had just closed. This is when I got the official signal, because this is going to be a primary signal. So I do need WADA to tell me what to do. And I did end up getting it on the close of this candle. I didn't get a chance to take it right before the close, as I prefer to trade, but I did catch it on the open, which spreads are a little higher right after the close, but it is what it is. But finally now price moving in my favor, and so nothing to do except let this ride. We're just going to kind of speed up here and look at a few more pairs. Euro Kiwi looks like it might be entering into a long trade right here, but not getting the signal from Minx. Let's go ahead and hop down to the pound dollar. Pound dollar is in this reversal baseline area. Again, as I've said, you don't want to be calling tops and bottoms, but this is where you might want to have your buy set, or more, perhaps a better way to look at this is this is where you want to be keeping your eye on price and then looking to see if we do end up getting that Minx and noise line cross up, which looks like it's probably going to take a couple days at this point in time. So, just keep your eyes on this one, the pound dollar, maybe in the next couple of days. Parralox is still telling you that you should be biased short, though. But again, above the baseline, we can't really be doing that. Kiwi dollar. This is a no trade zone for me. I want to see some movement from this. And let's look at the dollar CAD. Yeah, dollar CAD is treacherous right now. I would not touch this with a 10-foot pole. You can see that I attempted to take a trade on this. And was, mildly successful with this, did end up taking a short, took profit very, very quickly, and I'm out. I don't want to touch this. Dollar yen, one of my favorite pairs to trade, honestly. We are actually going to be getting that. Let's take a gander here. Got that continuation signal yesterday with hidden bullish divergence right down here and above the baseline. So this actually doesn't look too bad. Might be looking to take the dollar yen long. And Aussie Canadian. I am short on the Aussie Canadian. I did hit my first take profit over here on yesterday's candle, not getting the exit signal. So stop losses at break even. So really nothing to do. And of course, I do want to close the day out by looking at the dollar yuan. And we have not gotten volume yet. There's just not enough volume for us to be looking to take this trade. Wadatar explosion has kept us out of this, even though Parralox and Minx have been signaling to go long here for a few days. So this might be something that we regret, but overall, this has been a slightly treacherous pair to trade as well. Of course, we did, capture some okay movements on this one, but overall, not really thrilled about this one. And it doesn't really matter because, again, at the end of the day, I have to listen to the indicators, and it's not my subjective style of what I want to do. So that's our quick wrap up right there on Forex. Didn't go through all the currency pairs unless there's something. Jake says, I walk away from crypto for 2 seconds and everyone decides to break it. This is why we can't have nice things. Dan, good to see you, brother. You are down a fraction of a penny on my trade. I'm so sorry, man. Thank you so much, Crypto Caveman. Highly appreciate that. I love making indicators, man. It's one of my passions in life. Ken, down a fraction of a penny, but I'm staying in and taking the heat like a man. Now that's a quotable quote. That's a quotable, man. Quotable quote. Picking tops and bottoms is like picking your nose. It might feel good, but it's not something you usually want to hang on to. Put that on a t-shirt, man. Put that on a t-shirt. Okay. Have a quick glance at the SPY. Yeah, let's look at the SPY. Let's go over to traditional markets. And I'll actually look at the SP. I'm going to look at the CME futures. CME futures on the daily. I think this is better. Well, damn. Out of water. So you guys are just going to have to deal with my, I don't know, phlegm or something maybe as we continue to move forward. Do I ever use the Ichimoku indicator? I use the Ichimoku indicator for a very, very long time. And I have a full Trading Crypto 101 video on it. I think it's one of the best indicators to start with if you're new to trading because it will get you in the habit of trading systematically and looking for confirmation and using multiple components to confirm trades. But I don't currently use it. No, I don't. I think the Ichimoku is great to start with because it gets you trained and disciplined. But I think that eventually you'll want to graduate from the Ichimoku. There are still, as you can see here, I still have a component from the Ichimoku, which is the Kijun, which is the baseline that I'm using here. You know, Mr. QC, I know that's a typo, but Paradox might be a better name for the indicator. Looking at the SP here, man. I'm bullish on equity markets in general. I'm bullish on indices. We do have a couple things that are a little bit of an issue right now. We do have we have a demand, we have a supply zone that we need to overcome. That supply zone is coming in from 3005.8 to 3024. We do need to overcome that. And let's see what's the latest thing that we've flipped here. Well, I would not say that it's perfect, but so the reason this is a yellow line is because I think that this forms a good median for where price is. We can obviously resistance right here, acting as resistance. We can see that level get broken, back tested as support. We can see a fake out right here, and then overall this level is hold. Of course, that's 28.17. Would this be where I would be looking for price to go? I think that if we fail, do fail this kind of first important level right here, so I think that looking at this, and of course we do need to look at indices and we need to look at equity a little bit differently than we look at crypto and a little bit differently than we look at FX. So different components are going to come into play because there are different dynamics at work. So looking at this, I think the current level to watch is going to be 29.39. I don't really see it unlogical to see price go ahead and move its way on down about another percent down to 29.39. And we do have our baseline coming in right here around 29.17. So I think that represents a pretty good area to watch for a reaction from. So again, look for price to bottom right about here. And then if we do end up coming back above, you want to be a little hesitant because again, reclamation is a thing where we will retest and backtest that. But that would be a good BPC break pullback continuation, getting back above 29.39 once we kind of fall into this level between 29.39 and 29.17. I think I'd be pretty okay for just another bounce off of that area. That's where I'd be looking to buy. But if we close the daily below 29.17, then I would assume that we come back down and tag 28.17. And actually, if that is the case, I would actually be a little bit more short-term bearish. Now I'm still macro bullish on the S&P. I'm still macro bullish on the equity markets. I think they're gonna explode more in the long term. But having said that, just looking at this from a supply and demand point of view, I think that if we do end up coming down below 29.17, I don't really think we're going to stop at 28.17. I think we'll probably see that level get faked. I think we're going to see liquidity grabbed, and the next logical place would be 27.31. So again, looking at this from a trading perspective, I would be bullish, and I would look for a bullish reaction once price comes down to about 29.39, 29.17, gets back above. I would be looking to take price all the way back up to 3,005, 3,024, and I'd be looking to trend long. I'd be looking to go trend long once we get back above that level. And then, of course, anything above the baseline right here, if Minx and Wadatar Explosion and Parralox at this point in time, if they give a long signal, go. I'm going because I'm bullish, and I'm looking for any reason to buy stocks. But violating this level, violating this baseline, I'd be pretty bearish all the way down to 27.31. 27.31. And then that would be the area that I'd be watching for. So if we can hold this level, quite bullish in the short term right now. If we break this level, then I actually see a pretty steep decline coming in. I mean, pretty steep for the S&P. I mean, that's 6.38%. That's quite a few points, man. What up, Wally? My dude. Jake Rezio says, what do I think about the Fed injecting 75 billion into the banking system every night for the past 4 nights? They plan on doing it again tonight. Yeah, I actually talked about this for a very long time over the last few shows. I would go check out, was it yesterday's video? Or was it the video before that? Yeah. I would definitely go check out. I mean, I talked about it for almost 30 minutes, man. I have a lot of opinions on that. Here's the thing. I think that it is an extremely negative warning sign overall for the American economy. And that's exactly why I'm so bullish on equity. Exactly why I'm so bullish on equity. I don't think that it's going to happen this time. There are other reasons why I'm bullish on American equity markets as well. And the reason why is because of global turmoil. I think that we're seeing the destabilization of many, many currencies across the world. Negative interest rates on most central banks. The European Central Bank, pretty much all across Europe, has negative interest rates. And so people are looking to park their money in places where they can actually earn interest. We've already seen the yield curve inversion. All of these things are long-term warning signs. But the repo market, the fact that banks are running out of short-term liquidity is very indicative of the fact that they are very hesitant to lend to one another. But we have to kind of juxtapose that. I think we have to kind of juxtapose that with what's going on globally. And again, with the dollar being the world reserve currency, as I think a lot of other national currencies begin to fail or move more into negative interest rates, I think that they're going to pile into equity. So here's what I see. I see a massive blow off top for American equities that you do not want to underestimate. A massive blow off top. And then I think that we actually get the follow through on the liquidity crisis. I think we get the follow through on everything because it all comes down to manipulating retail traders. Banks don't want to sell at a loss. I think they're going to push, I think that the entire world piling into American equity and American dollars as a stable hedge against everything that's going on, regardless of the idea, as well as precious metals, as well as Bitcoin. I think that Bitcoin will respond to this positively. I see a massive blow off top for American equities. And then if we are going to enter into a recession off the heels of that. But the Fed injecting money is very, very, very worrisome because that's exactly what kicked off the 2008 financial crisis. Okay, with that being said, let's go take a look at the current events of the day. Okay. The first thing I kind of want to talk here about is Venezuela. So, according to a Bloomberg article today, reports out of Venezuela suggest that the government is considering adding Bitcoin or Ethereum. So, for you hodlers out there, let's do it again. I don't have it on this scene. Sorry. So, for you hodlers of Ethereum out there, hooray, to its official central bank holdings. Now, Bloomberg has unnamed Venezuelan sources, so we can't confirm the validity of this, cannot confirm or deny. I heard that it was Deep Throat. Now, they say that the country's national oil company and primary source of revenue, Petroleras de Venezuela, SA or PDVSA for short, is petitioning the government to utilize Bitcoin or Ethereum to restart their oil industry and help resume international trade with its suppliers. Now, unlike the state-issued Petro, Bitcoin and Ethereum have global acceptance and can be somewhat easily settled into fiat in order to meet financial obligations to international suppliers and customers. Now, because the Petro never really managed to get off the ground due to an expansion of financial sanctions to specifically marginalize it, I'm looking at you, Trump, a decentralized currency such as Bitcoin would be more difficult for global forces to sanction or prevent the state from trading in. So this is a pretty blatant opportunity. Wally, thanks so much for the $15, my man. Always get pumped up. Thank you so much. Shout out to you and Gunbot University. He says, do you personally see correlation between lead up to CME future contract expiration and Bitcoin price, and do you use that for trades? Learn, earn, and don't get burned. Not really. I've talked about this in the past, CME expiration. I don't really see a huge correlation, except that sometimes price does something and sometimes price doesn't. And I know that sounds like such a bullshit answer, but if you look at all the information that we have about CME futures and expiration and its effect on price 3 days prior and 3 days after, there is no direct correlation. Sometimes price does. I mean, often you see an increase in trading volume, i.e. an increase in volatility, but there's no directional bias that can be gleaned from it. And sometimes we have a big movement and sometimes we don't, is the reality of it. So because at best it's 50-50, it doesn't really make it into the way that I trade. Something's got to be better than 50-50 if it's going to make it into the way that I trade. I think it's something interesting. Now, obviously today we have expiration, of the September BitMEX XBTU19 contract. So I did say last night when I made my premium update to the subscribers in the group that, hey guys, if you're hedging on U19, now is probably not a bad time to start scaling that out and getting on over into the Z19 contract. And I think that I was, obviously I do that every time that the contract's going to expire, just making people aware that, the worst thing you want to do is go away for the weekend, not knowing that your short hedge was settled on Friday and then come back on Monday to price having declined and you've now lost a significant amount of cash. So, if I can see some different data on CME futures expirations, but all the research that I've done and all the research that I've seen just makes it unreliable in my opinion. Now, so I want to make it very clear. This is a very obvious attempt for Venezuela to weasel out of sanctions. And I think that overall, that's a good thing. I think that the country is being hurt by sanctions. And I think that the only reason for the sanctions at this point in time is a deliberate attempt to make the petro not get off the ground. That is pretty much the only thing. So as somebody I'm not a huge fan of Venezuela, not a huge fan of socialism. And I think that that is probably the biggest contributor to the problems that they have. But I think that in the realm of the United States and the global, the global international banking community attempting to, put the petro in its place, I don't necessarily think that's a great idea. So I actually support this because I do want, the Venezuelan people are down there suffering, and the more liquidity and access to actual fiat that they can actually get into their system, the better their lives have the potential to become. Now, if we can only hope that they overthrow the specter of socialism and actually re-engage the world with capitalism, they would, accelerate that rate quite a bit. But I digress. So I think this is good. I think this is good for Bitcoin, and I don't really care what America has to say about it. Now, the speculation is for the proposal by the PDVSA to have even been floated, suggests the Venezuelan government. Let me reread this. Okay, so the speculation is that the PDVSA is actually holding Bitcoin and Ethereum already in secret, and they are not obligated to reveal that information to the National Assembly until January 2020 at the earliest. So it's quite a potential that they've already been accumulating Bitcoin at this point in time, in which case, God hope that they weren't accumulating Bitcoin at the tops here, because they're probably all committing suicide at this point in time. But Bloomberg has reported that, quote, staffers are also studying proposals that would allow cryptocurrencies to be counted toward international reserves, now near a 3-decade low at $7.9 billion American. So they are looking to kind of prop up their reserves of a nation by actually holding things that have more value than what Venezuela currently has, which is not a whole lot. Now, this suggests that the hydroelectric rich nation may have already gathered a significant amount of the leading cryptocurrencies and is preparing to disclose this in a future campaign. The groundwork is said to have been laid as far back as April of 2018, in which a government decree legitimized cryptocurrency as a form of payment. So is this kind of a 4D chess movement from Venezuela to escape international sanctions and have a good basket of reserve currencies and cryptocurrencies that can allow them to really mitigate the effects of sanctions against them? Yes, it is. And I think it's a pretty smart plan. What can we expect coming from the international community on this? Well, it depends on how hardcore they want to use Venezuela as a torch to kind of ignite a war against cryptocurrency. Could this be negative for Bitcoin's price? Well, if Venezuela says that they're going to be holding a basket of cryptocurrencies as part of their, as a significant part of their reserves as a nation, and the larger body of international powers wants to say, well, we're willing to go to war against cryptocurrency just to push you down, Venezuela, because we just don't like your face, dude. Then yeah, this could be absolutely negative for Bitcoin's price. Do I think it's the only thing that's going to make an effect? No, but I think it's important to watch and be aware of because goddamn if they don't hate Venezuela. So Article 9 of that decree did stipulate that the Venezuelan government will promote and may establish cryptocurrencies as an instrument of payment. Now, while the nation will still need a domestic fiat currency in which the central bank manages the inflationary policy, government approval will mean citizens would have the ability to protect and preserve their own wealth in crypto and still have the government's blessing in converting to their national fiat and back. So again, this all comes down to giving power to those who have the least amount of power, the citizens, especially of a country that represses its own people, giving people the ability to actually hold their wealth in something that has value and can be settled into an international currency or international value, more so than the petro, which is worthless, and more so than Venezuela's national fiat, which is also worthless at current point in time, looking at exchange rates against other currencies. So let me know what you guys think about this. Is this good for Bitcoin's price? Is this bad for Bitcoin's price? There is a lovely comment section down there. And then, of course, this nice little live chat thing where I may have an opinion on your opinion. Moving right along. All right. So the ING's chief economist, Mark Cliff, I'm going to say Mark Cliff, not Mark Cliffy, will be speaking at a joint event to discuss central bank issued stablecoins. And he confirmed that the ING does hold plans of launching a digital currency of their own. Cliff went on to specify that they will be moving towards the creation of a digital currency in the next 2 to 3 years. All right. Pull up this for those of you who think I'm talking out the side of my head right here. This is the ING Group. It's a Dutch multinational banking and financial services corporation, and they are in ye olde Amsterdam. So now we all know that digital currency adoption is gaining significant momentum across the world. And we have examples of private corporate coins such as Libra, and we obviously have the JP Morgan coin. Libra is obviously set to launch in 2020. And we have, of course, as I just mentioned, interbranch settlement currencies such as the JP Morgan coin and the Wells Fargo coin, as well as the state-backed digital currencies seen from China and Venezuela as some of the first to embrace this new technology. Now, this is just another mainstream financial institution throwing their hat into the ring of digital currency development, with countless more likely cultivating similar projects under the radar. I think that we can expect in the next decade to give rise to a revolution in currency and finance. And I've said this, many, many times before. I think that in the short term, and by that I mean like 5 to 10 years, we are going to see a wild explosion and probable success of these types of instruments, right? Are they going to represent investment opportunities? No, not really. They can be used as indicators for other things that could qualify as investments. As it sits right now, stable coins are going to be fairly stable, right? One would hope. But again, this is also going to be a revolution for the foreign currency markets. I think that we are going to see a lot of nations transition away from fiat currencies as we know them today. The dollar, the Japanese yen, the Chinese yuan, the American dollar, the British pound, the Canadian dollar. I think that the majority of these are going to transition to central bank issued stablecoins. The technology is better. The control is better for them. The tracking is better for them. The manipulation is easier for them. It's just a logical progression of institutions moving toward technological advancement, obviously spurred by the revolution that Bitcoin and decentralized currency is. And they want to get in there and they want to shut that down. They want to maintain control. They want to maintain power. And the only way that they can do that is by moving into this new realm of technology. So I think that we are going to see that transition happen. And what does that mean for foreign currency trading? I don't know. Is it something that could go away? It's quite possible. Are we going to be able to trade the digital dollar against the digital Canadian dollar? Are we going to be able to trade the digital yuan against the digital renminbi? Well, you can bet your bottom dollar that the big banks are not going to want to see that volatility and profit for them fade away. That is their primary source of income, in my opinion. But I digress. Now, the open discussion on the future of economic policy and technology was put on by ING and the banking think tank OMFIF. Now, they covered a range of topics regarding the major advancements in decentralized finance, along with the discussion of advantages and drawbacks of central bank issued stablecoins. Now, the ING did confirm that development of their digital currency project is came in just a week after releasing their report titled From Cash to Crypto, The Money Revolution. The report did claim that despite the hype around crypto, cash will remain relevant, and the theory of a cashless future is highly unlikely. I do disagree with them on this point. Governments around the world want to transition away from cash because they want to be able to monitor and control every single transaction. Now, while paper fiat may not be disappearing right away, it's undeniable that world governments and financial regulators are coming around to accepting the ongoing innovation of currency and accounting in the 21st century, i.e., we are going to be transitioning to fully digital money. Now, the big battle comes between fully digital centralized money and fully digital decentralized money. And again, decentralized money stands as a bulwark against the centralized model. There is obviously they exist in conjunction right now. And I think that duality is likely to continue for a very long period of time. I do not see Bitcoin overthrowing government issued fiat anytime soon. I do not see the nation state going away anytime soon. Humanity is a slow evolving organism, society even more so, slowly. And I think that it will take us a long time to transition to an overall better state of society, where we embrace things like ethics and philosophy and universal values. I think that these things exist. I think that they are objective, and I think that they will eventually be what we move toward as a human species. I think that we will eventually transition away from the nation-state archetype. I think that we will transition away from it really says it all there, the nation-state archetype. I think it is the big battle whether we move toward whether that transition is oppressive or liberating. Do we move toward a one world government nightmare scenario where we have just one overarching tentacle of centralized power? Or do we transition into a world, into a society where we realize that we don't need that and that people can take care of themselves and we can have structure without centralized authority? We'll see. This is the epic argument between Alexander Hamilton and Satoshi Nakamoto. All right, so let's talk about manipulation, guys. Okay, we'll take your cookies. All right, are institutional investors manipulating the Bitcoin price? Well, since the launch of the CME futures contracts, speculation has run rampant on the cash-settled market manipulation of Bitcoin's price. Now, new data coming from Arcane Research seems to support these claims. Thomas Lee from Fundstrat, for example, has been saying for over a year now that Bitcoin seems to decline right before future settlement contracts end on the CME. Arcane Research have since crunched the numbers more closely, seemingly validating these suspicions of manipulation through futures. Bitcoin's price falls on average, according to this report, around 2% ahead of CME settlements, more than both the average and median compared to any other day. Arcane also found that in only 5 times out of 20 were the days before the CME settlements. Arcane also found that in only 5 times out of 20 that the CME settled in the green. In other words, days preceding the CME settlements have been overwhelmingly negative. The drops preceding CME settlement closes also seem to be worse whenever Bitcoin has posted more returns for the month. The drastic drops preceding each settlement closing, especially on the CME, points towards some level of price manipulation occurring. So, we just talked about this. Wally, this is good. This is good that we have this article because this is going to add nuance. Now, according to Arcane Research, they're saying that only 5 times out of 20 in their research did the CME settle in the green, meaning that it would seem to come from this argument that if you just took at this a base level analysis, it would say a short trade is the better trade to go. The problem is you need to look at where the futures contract opened up at, right? You need to look at where the futures contract opened up at, because all they're saying is that on average, price settles 2% lower on expiration date. Okay. Now, for some traders, that 2% is going to be all that they want and all that they need. But of course, as trend traders, we're looking for far more significant movements in the market. And what happens directly after those settlements? Does price move in the opposite direction? Does price consolidate for a long period of time? Does price continue to move down? As I said, there would seem to be weak directional bias confirmation here and ideas of market manipulation. But I don't think that this information or this knowledge is going to be germane to many traders. First off, we don't have a lot of data. CME futures have been around not very long. So short-term data is not great to go off of, especially when you're looking at how many times contracts expire, which is even less than about the 18 months that the CME futures have been around. A little bit longer than that, but I digress. And I would say that 75% of the time, price closing 2% lower on expiration date. I don't know. You can take that information as you will. Again, as I said, I don't really see the usefulness of this information to me as a trader. And because it does not, as I said, the main problem here is that it does not give you directional bias. Now, if this is kind of an addendum trade that you want, it seems that 75% is a pretty strong hit rate. So if in the days, all I can take away from this is it would seem that in the days leading up to the CME futures, one might want to be short and then look to close that short out at expiration, right? We have to understand, though, that price is going to diverge. When you're trying to take, mark to minute prices like that, price is going to diverge on the CME futures as opposed to spot index prices. So take the information as you will. I don't think that it's supremely helpful or interesting, but of course, we do have market manipulation coming in from the CME. We have market manipulation all over cryptocurrency. Whales manipulate price, but they don't just manipulate price. It's not just all price manipulation. Manipulation does occur in the cryptocurrency markets, but there's also supply and demand. And coming in, just a honorable mention here. Coming in from the Motley Fool is Mastercard announcing we talked about this a little bit before, but I just wanted to give you guys a little bit more information. Mastercard announcing their new blockchain payment system, and Square hiring some more Bitcoin developers. Just some positive news to kind of end up that market manipulation on a positive note. Do you guys think it's possible that blockchain technology is going to disrupt the global payment system? We've kind of talked about this before. I think that it's absolutely possible, but not necessarily as a medium of exchange. Again, I comport with with Saifedean Ammous's argument that we don't actually need Bitcoin to be the currency that does the transaction. It is the settlement layer. Does Bitcoin represent the future of money? Absolutely. And if so, how can we position ourselves to profit from these trends? So these are questions that powerful companies, including Mastercard and Square, appear to be asking for themselves. So moreover, these financial innovators are taking action to prepare their businesses to compete and win in a crypto-based world. So just good information coming in here. Now, Mastercard has partnered with R3, they of the Ripple blockchain. I don't really think that's absolutely fantastic choice for them, but I digress. Square and Square has obviously hired quite a few people to build up their services here. So, article will be linked in the description if you guys want to learn a little bit more about this. I just thought it would be good to kind of end on a positive note. So, with that being said, guys, let's get back over into the live stream. And we left off on the S&P. Let's get back into Big Daddy Bitcoin. All right, let's see here. Intraday trades. Stop loss right here. Next target would be right here. and right here. Okay. Trade safely. Let's go over into the comment section. We are arguing about XRP. Audrey says, I don't know what socialism is. Is it possible to summarize it in a few words or a concept? Thank you anyway. So I feel like this is a trap, but here we go. In my opinion, generally the dictionary definition of socialism is going to be centralized government, or in a broader term, some centralized authorities, ability to control the means of production for society. Meaning, what does that mean on a practical level? It means that there is no true free market. It means that the market is not allowed. So buyers and sellers and willing participants in the market are not able to determine prices and are not able to determine profits and are not able to determine reasonable pay amounts on their own. Generally, these things have to come. Generally, these things are owned by the state, controlled by the state, and therefore, in that element, are regulated by the state. So from a practical level, socialistic nations, and this is different from capitalist nations that have large social welfare programs. There is quite a difference. But generally, socialist nations are going to set fair pay rates. They're going to they're going to control corporate boards. They're going to control what companies can and cannot do. They do not allow the free market to run things. So as opposed to a capitalist nation, which is individuals have property rights. So property rights is really the big problem here. In a socialist nation, you do not have the right to your property. The state owns the right to your property, i.e. the fruit of your labor. You do not own their own fruit. You do not really have the fiat right, not the fiat right, but you do not have the exclusive right to the fruits of your labor. The state owns it and lets you and grants privilege to you, basically. Your labor belongs to the state in a socialist nation. Whereas in a capitalist nation, your labor belongs to yourself. So this has a lot of effects on the economics of a nation. This has a lot of effects on the welfare of a nation as well. And socialist nations, socialist governments typically justify everything that they do through the lens of protecting the people or keeping the peace or promoting stability of the currency or whatever nonsense that they say. But we have not yet seen a socialist nation that has done well. And I would say that we've seen more socialist nations starve their people than do well. Michael Weston says, A decides what B will be giving to C. Good summation. $153. Good stuff, man. Good stuff. Good show, guys. Good show. This would be the time. If you have questions, if you have comments, sarcastic remarks that would you like me to respond to? Is there any difference between socialism and communism? In the beginning, socialism is usually the word that's used for the bridge between capitalism and communism. Socialist nations usually devolve into dictatorships. So typically in socialism, you'll have pretty much the same structure, but there will at least be some play at, a representative body, democratic body, representatives, or a parliament, or something of that nature. But, sometimes not. Look at Venezuela. Damn. Can I briefly explain auto deleveraging on bybit as I'm down to 1 times 2 on my 1x short at the moment to keep out of the red? Okay. Here we go. So for a position to be opened up, there has to be a willing buyer on the other side of the market, right? So in the event that there are a lot of liquidations, which means there are positions that have to be forcibly closed. If there is not an insurance fund, for example, which is what BitMEX employs, if there is not an insurance fund to cover the potential difference between the price at which you're going to go bankrupt, right? So let's start off with explaining the difference between, let's start off with the difference between liquidation price and bankruptcy price, okay? And this is going to deal with the concept of maintenance margin, right? So when you open up a leveraged trade, you have to put up margin, right? That's your collateral to take the money that is loaned to you either from the broker, and that money typically comes from an investment bank, or in Bitfinex's case, it actually comes from community funding, for example. All exchanges do this a little bit differently, but I digress. So, and you know, for BitMEX, BitMEX is a good example, and Bybit as well. It comes from individuals that loan money to be loaned out in the form, and they receive. You're paying them basically a fee to do that. So, and that's the Bitfinex model of community funding for leverage. So, there's also a portion of your margin that is known as maintenance margin, and essentially what that is your liquidation price is going to be when you've lost all of your margin minus your maintenance margin. Your maintenance margin is still left, and your maintenance margin is there to cover any fees that might be associated with closing out your trade, and they're also there to cover any divergence between the mark price at which you have reached the liquidation price and the price where you actually get filled at, to cover slippage, essentially, right? Because when you get liquidated, let's say you're long, and so when you are liquidated, let's say you have 10,000 contracts long and you reach your liquidation price. Well, that's 10,000 contracts that needs to go somewhere. There has to be a willing buyer and seller, right? There is no divergence. There's one long for every short. So there has to be a willing buyer on the other side of the market. Somebody has to be willing to sell the contracts, right? For everything to close out and go equal, right? Now, if there is not a willing buyer, depending on liquidity, depending on the market, depending on the price, there's going to be a divergence in the price that you get filled at, and the divergence where you actually get liquidated. And that maintenance margin is, in theory, there to cover any slippage or fees that might be associated with that cost, so that everything can balance out. Now, your bankruptcy price is the price at which you have lost everything, your margin plus your maintenance margin, okay? The totality of your margin, right? And at that point, any slippage from that level now has to be covered by somebody else. And I'll tell you what, the exchange sure as hell is not going to cover it. So what do when such a situation occurs? They employ auto deleveraging, meaning they forcibly, if there is not a willing buyer at your liquidation price, and if there's not a willing buyer, once your maintenance margin has been utilized, they're going to employ auto deleveraging, and they use a hierarchy, like basically who's the most profitable, who's been in a short the longest, and they're going to force your orders closed to close out the trade that's now being liquidated. That's how it works. Otherwise, if they did not do that, they would have to socialize losses, basically meaning anytime that occurred, they would take an equal amount of contracts off of everybody else. They don't do that. And I think that's the better way to do it. Basically, if you are super, super profitable, if you just had a really super dope killer trade, they're going to say, hey, it's your turn, buddy. Time to throw a poker chip into the hat because you're buying coffee tonight. And they'll close out as many of your contracts as necessary to actually settle the books. So it's never fun when it happens. We will see it happen if you have highly profitable positions and there is a massive move in the market. This occurs, low liquidity markets are going to have this issue, but it's something that gets better with time. All right. Thank you so much, Elijah. Highly appreciated, my good friend. What did I do for a living before I became a trader? I've been a butcher, a baker, and a candlestick maker. But actually, my job right prior to becoming a full-time trader, I was a supervisor at a HVAC manufacturing company, an international HVAC manufacturing company. Had actually quite a nice position, very good benefits, quite a high rate of pay. Managed multiple production lines. Prior to that, I was an entrepreneur. I actually left the world of entrepreneurship to actually take this job and did that for quite a while. Worked at the HVAC company. My first company I started in college was actually dealing in organic vegetables. So I've done quite a lot of things, but I've been fascinated with investment and statistics and trading since I was very young. And it's a passion that I've carried through for my entire life. And then at some point in time, I just decided, I traded on the side, for a very long period of time and was profitable in it. And would race home from work to trade and would do quite well with it. And, went through all the steps of developing the way that I wanted to trade. And then I knew that I was consistent. When I knew I was consistently profitable and I actually had the results to show it, luckily I had a good friend who helped me lily pad out of my full-time job and into the full-time job of trading. And it was absolutely terrifying, but I did, and I haven't looked back since, and I'm very glad. And that person knows who he is, and I'm eternally grateful for you for helping me through that. That was a difficult period in my life. And for that reason, I think that trading is can be one of the most stressful jobs out there, especially if you don't know what you're doing. But then if you don't know what you're doing, you have other problems beyond the emotional strain. You definitely need a good support team, community to talk, to share your feelings, because oftentimes the things that we need to talk about as traders is not, hey man, is your signal good or bad? Or, what's this indicator say? Or, am I back testing right? Often the most important things for a trader are going to be, dude, I just need to talk to somebody right now. I just had a good trade and I need to, make sure that I'm not going to take over risk, or I just had a bad trade and I feel like jumping out the window. You need support, man. You need support. And if you have that kind of baseline level of emotional and psychological support, I think you can do quite well, man. So pretty much Bernie Sanders runs bybit. All right. Hey, guys, I'm sorry I can't get to the rest of the questions. I do got to run. I got some appointments coming up right here. I've already gone 2 minutes over. Sorry that I can't look at Ethereum, my guys. I apologize. And I'm also sorry that I can't look at MCO. You guys are absolutely fantastic. Thank you guys so much for your comments, for your help, for viewing the show. You guys are absolutely fantastic. But it is that time of day when we need to slide on over to the second camera angle and have a chat. Let's go. All right. The reason gentlemen, the reason I've called you here today is to let you know that you need to have a fantastic weekend. Thank you guys so much for joining me for another exciting episode of Breaking Bitcoin. Of course, I have been your host, Justin Wise, lead analyst and senior mentor around these parts that we call cracking cryptocurrency. If you guys have any questions, comments, thoughts, sarcastic remarks, and or death threats, please leave them in the comments section down below, and I'll do my best to respond to you over the weekend, especially if it's a good one. So pump up those good ones. Entering a comment down below will also enter you a chance to win 8,000 Spectre, which we do give away every day around her. Now, the one thing you guys need to do, besides, subscribe, follow, share, engage, spread it around, hit the thumbs up button, always highly appreciated, is hop in the Discord. We just talked about the importance of community, and we've got a great one. Discord.crackingcryptocurrency.com. We do our best to keep it as organized as possible. A lot of great traders in there, a lot of great guys in there, and we have some great fun conversations in there as well. If you guys would like to trade along a little bit more closely with us, get mentoring from our analysts, have access to our signals and setups, use our indicators, learn our rules, and follow our rules and use our tools, then make sure to check out premium.crackingcryptocurrency.com. I would love to help you in this journey that we're all on to become a better trader. Link for that in the description down below, as well as links to anything you might need as a trader. I've been Justin Wise. We will be back here on Monday at noon p.m. Central Daylight Time, foul year of our Lord 2019, to break down how Sunday evening goes. Make sure to trade safely. I'd be a little bit more biased to the upside over the weekend, but as always, watch your risk, watch your stop, and be fantastic, guys. I'll see you on Monday to crack some cryptocurrency. Trade safely, guys.